The immortal equation, Y assets. The immortal equation, Y assets equals liabilities plus equity never dies. Introduction: The Ghost in the Machine. In the year 1494, a Franciscan friar named Luca Pacioli published Summa de Arithmetica. Tucked away in this massive encyclopedia of mathematics was a particular chapter titled Tractatus de Computis et Scripturis, Treatise on Accounts and Records. In it, Pacioli didn't just describe a way to keep track of money, he codified a law of financial nature. Today, we know it as the accounting equation. Asset equals liabilities plus equity. It is the foundation of every financial statement on Earth, from the corner grocery store to Apple Inc. But why? In a world where technology changes every 18 months, why has a 500-year-old math formula remained untouched? The answer isn't just tradition. It's because the equation is a mathematical reflection of physical reality. Chapter 1. The Geometry of Ownership. To understand why the equation is immortal, we have to look at what it actually represents. It isn't just a calculation. It is a description of origin. Assets represent the physical or intangible stuff a business controls. It's the inventory, the cash, the machinery, and the patents. But in the universe, stuff does not simply appear out of thin air. It must be funded. This is where the right side of the equation comes in. Liabilities and equity represent the claims on those assets. If you bought a truck with a bank loan, the bank has a claim, liability. If you bought the truck with your own savings, you have the claim, equity. The reason the equation never dies is that it is impossible to have an asset without a corresponding source of funding. If you find $1 on the street, your assets go up by $1, and your equity, wealth, goes up by $1. The symmetry is inescapable. Chapter 2. Pacioli and the Renaissance Mindset. Luca Pacioli lived in an era of divine proportion. He was a close friend and roommate of Leonardo da Vinci. For the Renaissance mind, balance was a sign of God's presence in the world. Pacioli viewed the double-entry system as a moral safeguard. Before this system, records were often just lists of what people owed. This was messy and prone to fraud. Pacioli's system introduced a dual effect for every transaction. If you sold a bag of silk for gold, you recorded the silk leaving and the gold entering. This created a closed-loop system. For the first time, an error in the books would cause the scales to tip. If the equation didn't balance, the merchant knew immediately that there was either a mathematical error or a thief in the warehouse. This transparency allowed for the birth of large-scale trade. You could finally trust the books of a partner thousands of miles away. Chapter 3. The Industrial Revolution and the Test of Scale. As we moved into the 1800s, the world changed. We went from small merchants to massive railroad companies and steel mills. Many thought the simple Friar's equation would be too primitive for the complexities of the Industrial Revolution. They were wrong. As businesses grew, equity became more complex, split into millions of shares of stock, and liabilities became more intricate, bonds, convertible debt, etc. However, the fundamental logic held firm. No matter how large the corporation became, the total value of what it owned, assets, still had to equal the total value of what it owed to others and its owners. The equation proved to be linearly scalable. It worked for a merchant selling 3 lemons, and it worked for the British East India Company. It didn't die because it was the only system capable of organizing the chaos of modern industry. Chapter 4. The Digital Leap. Why software didn't kill the formula. When the first computers entered the accounting world in the 1950s and 60s, there was a belief that we might find a better way. Maybe a single-entry system powered by super-fast processors? But the software architects realized something. The accounting equation is the ultimate error detection code. In computer science, we use checksums to ensure data isn't corrupted. The accounting equation is the original financial checksum. When you use modern software like QuickBooks, SAP, or Xero, the double entry is happening behind the scenes in milliseconds. Every time you click Pay Bill, the software is performing a dance of assets down arrow and liabilities down arrow. The code is built on the bones of Pacioli's logic because any other system would be prone to data corruption and phantom money. Chapter 5. The Challenge of the Future, Crypto and AI. We are now entering the era of blockchain and artificial intelligence. Some claim that the triple-entry ledger of the blockchain will finally replace Pacioli's system. However, triple entry doesn't replace the equation. It just makes it public. A Bitcoin wallet still has assets, the tokens. Those tokens were either purchased, equity, or borrowed, liability. The blockchain simply proves